Thank you for standing by. My name is Kayla, and I will be your conference operator today. At this time, I'd like to welcome everyone to the Atmos Energy Corporation Fiscal 2026 Second Quarter Earnings Conference Call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. If you'd like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press the star and 1. I would now like to turn the call over to Jennifer Wernicke, Director of Investor Relations and Assistant Treasurer. You may begin.
Thank you, Kayla. Good morning, everyone, and thank you for joining our Fiscal 2026 Second Quarter Earnings Call. With me today are Kevin Akers, President and Chief Executive Officer, and Chris Forsythe, Senior Vice President and Chief Financial Officer. Our earnings release and conference call slide presentation, which we will reference in our prepared remarks, are available at atmosenergy.com under the Investor Relations tab. As we review these financial results and discuss future expectations, please keep in mind that some of our discussion might contain forward-looking statements within the meaning of the Securities Act and the Securities Exchange Act. Our forward-looking statements and projections could differ materially from actual results. The factors that could cause such material differences are outlined on slide 29 and are more fully described in our SEC filings. With that, I will turn the call over to Kevin Akers, our President and CEO. Kevin?
Thank you, Jennifer, and good morning, everyone. We appreciate your interest in Atmos Energy. Yesterday, we reported year-to-date fiscal 26 net income of $985 million, or $5.92 per diluted share. And we updated our earnings per share guidance range to $8.40 to $8.50. Our capital expenditures for the first half of the fiscal year totaled $2 billion, with over 89% of those investments focused on enhancing the safety and reliability of our distribution, transmission, and underground storage systems. Across our service territories, we continue to see steady customer growth. For the 12 months ending March 31st, 2026, we added over 51,000 new customers, with over 39,000 of those new customers located here in Texas. And during the second quarter, we added over 800 commercial customers and 4 new industrial customers. This continued demand from all customer classes demonstrates the value and vital role natural gas plays in economic development across our service territories. In APT, we continue to work to enhance the safety, reliability, versatility, and supply diversification of our system, as well as support the continued growth we are seeing in the local distribution companies behind APT's system. During the second quarter, we completed Phase 2 of the Line WA project. This project installed approximately 44 miles of 36-inch pipeline to the west of Fort Worth to support growth in this area of the DFW Metroplex. Additionally, APT enhanced supply optionality, reliability, and system versatility with the completion of 5 interconnect projects and adding nearly 100,000 MCF a day of additional natural gas supply to the APT system. These investments further enhance APT's ability to serve the LDC customers behind their city gates. These LDC customers also benefit from APT's rider rev tariff, which shares approximately 75% of APT's other revenue billed that is above a specified benchmark. As a reminder, these revenues vary from year to year based upon available capacity on our pipeline and natural gas pricing dynamics in Texas. Over the last 3 years, these customers have received approximately $150 million in total as credit from the rider rev tariff. As you'll hear from Chris in a few minutes, natural gas pricing dynamics have positively impacted APT's other revenue billed in the first half of fiscal 2026 and are expected to favorably impact our financial results for the remainder of the fiscal year. Our customer support associates and service technicians continue to provide exceptional customer service, achieving customer satisfaction ratings of 97% for the first 6 months of the fiscal year. Truly outstanding work by this team. Additionally, during the first half of the fiscal year, our customer advocacy team helped over 33,000 customers receive approximately $9.5 million in funding assistance. And recently, we were named to the Forbes list of America's Best Large Employers. ranking as one of the top 100 employers overall and placing second among all utilities. This is the sixth consecutive year Atmos Energy has been named to this list. This recognition reflects the continued dedication, focus, and effort of all Atmos Energy employees to safely deliver reliable and efficient natural gas to homes, businesses, and industries to fuel our energy needs now and in the future. Their commitment has us well positioned for the remainder of the fiscal year. Now I'll turn the call over to Chris for his update.
Thank you, Kevin, and thank you to everyone for joining us this morning. As Kevin mentioned, earnings per share for the first 6 months of the fiscal year was $5.92, which represents a 12.5% increase over the prior year period. Our year-to-date results include $94 million, or 43 cents, from the impact of Texas House Bill 4384. Of this amount, $44 million was recognized in our distribution segment, and the remaining $50 million was recognized at APT. During the second quarter, the Texas Railroad Commission completed its final rulemaking to codify Texas House Bill 4384 into Rule 77102. As you know, this rulemaking reduces lag in Texas by permitting gas utilities to defer post-in-service carrying costs, depreciation, and ad valorem taxes associated with non-eligible Rule 8209 capital investments, such as new customer growth and system expansion. Since adopting Rule 77102 in late fiscal 25, we've been presenting the deferral of post-in-service carrying costs as a reduction to interest expense to be consistent with Texas Rule 8209. With the new rule now final, we have determined it is most appropriate to present the deferral of post-in-service carrying costs in the income statement line items where the incurred costs are classified, O&M and interest expense. This updated presentation has been reflected in our fiscal second quarter and fiscal year-to-date results, which reduced reported O&M for the first 6 months of the fiscal year by $41 million. Our year-to-date performance was influenced by several additional factors. Rate increases in both of our operating segments totaled $171 million. Operating income increased by an additional $32 million due to residential and commercial customer growth and increased customer load. Finally, APT's through-system revenues, net of rider rev, increased about $16 million, or 8 cents. Substantially all of this increase reflected higher spreads realized during fiscal 26 compared with fiscal 25. During the first 6 months of fiscal 26, the spreads we captured averaged $4.35 compared to $1.80 in the prior year period, reflecting rising associated with gas production, constrained takeaway capacity, and lower demand due to unseasonably warm weather during this past winter heating season. Excluding the impact of Rule 77102 deferrals, consolidated O&M increased $27 million, reflecting higher employee, compliance, and safety-related spending in our distribution segment and higher maintenance spending at APT. From a regulatory perspective, since the beginning of the fiscal year, we have implemented $136 million in annualized operating income increases in our distribution segments. Currently, we have 13 filings in progress seeking nearly $600 million in annualized operating income increases. We expect to implement approximately 40% of this amount, primarily during our third fiscal quarter. The largest filing we expect to implement during the second half of the fiscal year, APT's GRIP filing seeking $112 million in annualized operating income increases, is scheduled to be considered by the Texas Railroad Commission next Tuesday, May 12th. Our equity capitalization as of March 31st was 61%, and we did not have any short-term debt outstanding. During the second quarter, we extended our 4 credit facilities that provide $3.1 billion in total liquidity. At quarter end, we had $4.1 billion in available liquidity to support our operations. This amount includes approximately $890 million in net proceeds available under existing forward sale agreements, which is expected to satisfy the remainder of our anticipated fiscal 26 equity needs and a portion of our anticipated equity needs for fiscal 27. As we reported last night, we have increased our fiscal 26 earnings per share guidance from an original range of $8.15 to $8.35 to a new range of $8.40 to $8.50. We expect the remaining contribution to fiscal 26 earnings per share to be recognized somewhat evenly by quarter in the back half of the fiscal year. 2 key items are driving the increase in our fiscal 26 guidance. First, our guidance reflects our expectations for the performance of APT's through-system business for the second half of the fiscal year. As we've mentioned before, going into a fiscal year, we base our assumptions for this line of APT's business assuming revenues in line with our benchmark based on historical norms for available capacity on our system and pricing. Although we have recently seen some modest improvement at Waha, we anticipate natural gas pricing in the Permian will remain challenging for the remainder of our fiscal year. As I mentioned earlier, this part of ATP's business added 8 cents period over period. We currently anticipate that APT's through system business will add an additional 8 to 12 cents for our fiscal 26 results during the second half of the fiscal year. Secondly, with final rulemaking completed and improved visibility into the timing of our capital spending in Texas for the remainder of the fiscal year, we believe the impact of implementing Rule 77102 will be higher than originally planned. We estimate this impact will range from $155 million to $165 million for the entire fiscal year, including the deferral of incurred post-in-service carrying costs, depreciation, and ad valorem taxes. We still anticipate our O&M to be in the range of $865 million to $885 million. We have reflected the estimated impact of Rule 77102 deferrals in our O&M guidance. However, we anticipate this decrease to be substantially offset by higher system monitoring, compliance, and employee costs. And we anticipate our interest expense to be in a new range of $155 million to $160 million. This increase is solely due to the reclassification of the 77102 deferrals from interest into O&M that I mentioned earlier. Finally, we remain on track to spend approximately $4.2 billion in capital expenditures for fiscal 26. We appreciate your time this morning and your interest in Atmos Energy. We'll now open up the call for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. Your first question comes from the line of Julian Dumoulin-Smith with Jefferies. Your line is open.
Hi, good morning, team. It's Paul Zimbardo on for Julian. Thanks for taking the time.
Good morning.
Thank you. The first I had was just on the dividend increase, like roughly 15%. Again, quite impressive and even better than where you've been trending in the past. Just any thoughts on kind of how is sustainable? Do you intend to kind of keep increasing above trend? And just overall thoughts on the dividend perspectively would be useful.
Yeah, I think we stated for a while now that we're going to grow the earnings per share at a 6 to 8% range and commensurately grow the dividend. And that's where we're going to continue to go as we move forward.
Yeah, as a reminder, that 15% year over year is reflective of the dividend being rebased in addition to rebasing the earnings per share because of the expected impact from Texas Rule 77102.
Okay, so kind of converging back to where you were before after the rebase. Okay.
Yeah.
And then the other was just, could you unpack a little bit more? I know you gave some detail on the kind of the shift between O&M and interest expense. If you could give a little more details and just confirming that is kind of basically a 1-for-1 change, not a net earnings impact there.
Correct. It is not a net earnings impact. It is a reclassification in how we present the deferral of the incurred post-in-service carrying costs at the end of the day. So originally we had all of that in the interest expense line item. With the final rulemaking, we looked at the proper classification of that. Incurred post-in-service carrying costs reflects all costs associated with the gas plant investment that has been subject to the rulemaking that has not yet been reflected in rates. That includes O&M, interest, and other costs. So we elected to present that deferral in the line item of the income statement where the costs were originally incurred and reported, if that makes sense.
Okay, no, that does make sense. And then if I can sneak in the last one quick, you mentioned that there's been a pretty dramatic move in Waha. Just any way that you would frame that kind of beyond 2026 for customers?
No, I mean, obviously we don't have a crystal ball out there. We'll continue to watch what happens over the next 6 months. We're not even into the real heat here in Texas, so the power gen load hadn't kicked in yet as well. As Chris said earlier, we have seen some moderation from some of the historic highs at Waha and the basis differential. So we're going to continue to monitor as we go through the next 6 months. We'll keep you updated on these calls as we move forward.
Okay. Thank you very much, team.
Thank you.
Your next question comes from the line of Richard Sunderland with Truist Securities. Your line is open.
Hey, good morning. Thank you for the time today.
Good morning. How are you?
Great. Thank you. In terms of the guidance raise, I know you parsed two different pieces there. How do you think about that as a base for growth going forward? Obviously, that clarification on rulemaking for Texas 77102 sounds like a new long-term view, but is that 840 to 850 a good clean base for the 6% to 8%?
Yeah, at this point, we think that's a pretty good base to think about fiscal 27 and beyond as a launch point within that range.
Great. Thank you for that. And then on the ATM, I think if I'm reading the disclosures correctly, you didn't price anything on the quarter. I know you're a little bit ahead with having part of 27 addressed, but how are you thinking about activity there? Was there any hang up on the quarter specifically and just timing overall of ATM activity?
No, on the ATM activity, you're correct. We didn't price anything during the second quarter. As you mentioned, we were fully priced for fiscal 26. Got a pretty good portion already established for fiscal 27. So we just wanted to kind of see what the market was doing. As you know, there was a lot of volatility in the second quarter with geopolitical events and economic news and whatnot. So we decided to keep our powder dry for the quarter, but we'll evaluate as we move forward pricing opportunities so we can get further ahead on fiscal 27's equity needs at the right time.
Great. Thanks for all that.
Thank you.
Again, if you'd like to ask a question, please press star, then the number 1 on your telephone keypad. Your next question comes from the line of Ryan Levine with Citi. Your line is open.
Good morning, and thanks for taking my questions.
Good morning.
Appreciate the disclosure around the commodity price movements in Waha. If you were going to break out what the earnings contribution was this quarter and any early indications of what you were seeing last month.
Breaking out the earnings for the quarter on just the APT through system business?
Correct.
Well, as I said, I looked at it more on a year-over-year basis because we really just look at our performance in totality on a full fiscal year basis. And that was $16 million or about 8 cents year-over-year.
Okay. And given what we saw last month, would the monthly benefit be trending higher given some of the commodity spread movements that we've seen?
Well, as I mentioned, kind of in wrapping up my comments around the guidance, we're anticipating another 8 to 12 cents in the second half of this fiscal year, which contemplates the activity you saw in the month of April.
Great. And then lastly, just in terms of the Dallas-Fort Worth area growth dynamics, what are you seeing on the ground in terms of kind of just customer growth and expansion of volumes across your footprint?
Again, as we talked about it in my opening remarks, of the 53,000 or so we added for the last 12 months ending March, about 39,000 plus or so of that was here in Texas. So again, we continue to see good growth across all areas, good residential growth across Texas. And again, on our opening remarks there, good commercial growth as well with what we've added year to date. And the industrial side continues to show good positive results as well across the footprint, adding new industrial accounts, Kentucky, Tennessee, Virginia area as well.
Appreciate the time.
Thank you.
And your next question comes from the line of Aditya Gandhi with Wolfe Research. Your line is open.
Hi, good morning. Thank you for taking my questions.
Good morning.
Good morning.
I wanted to start on your comment about 840 to 850, the updated guidance range being a good base or launch pad for 6 to 8% growth 2027 and beyond. Just can you maybe speak to how you're thinking about APT spreads, maybe normalizing when you get back out to 2027 and how we should think about that impact in 27 and beyond? Is that sort of contemplated within sort of your 6%-8% growth view off of the updated guidance range?
Yeah, at this point, I would encourage us to let's get through the next 6 months and just see what the world brings. Again, we've seen where the spreads have been the previous 6 months. We've got a short window into what it looks like here in the next few weeks. But again, we haven't even gotten into the heating season yet here. So we're going to let the market move through the next 6 months. We'll see what it presents itself. And as we get closer to the end of 26 and we're ready to talk about 27, we'll let you know what we think about the market and where the market currently stands and how we incorporate that into 27 and forward.
Understood. Thank you. And my second question is regarding your comment about the benefit from the Texas legislation, now the final rulemaking being higher than originally planned, sort of in that $155 to $165 million range for fiscal year 26. Can you, one, clarify, is that a pre-tax or post-tax amount? And it seems significantly higher than, the original sort of maybe 40-cent annual run rate that you had pointed to. How should we think about that benefit sort of beyond 26? Should we see a similar, maybe even growing benefit as your capital plan grows in the ATOs?
Yeah, so to clarify, the 155 to 165 amount impact from 77102 for the full fiscal year is a pre-tax number. And as I mentioned earlier, kind of going into the fiscal year, the rule was fairly new when we were establishing our budget and guidance. There was certainly rulemaking that was going on that actually modified the rule a little bit from our original thinking. So we've got a better handle on that going forward now. Also, visibility into our spending, as I mentioned. So, this is basically, as we talked about at the beginning of the fiscal year, a rebasing year because we're now layering in the impact of the new rule to all of APT spending and the remainder of the distribution spending in Texas that didn't qualify under Rule 8209. So going forward, we were still guiding in that 6 to 8%. Off of, as you mentioned earlier, a new range of 840 to 850. So the impact is in our 5-year guidance is reflective of that as well. So we feel confident we're not going to see another rebasing going into fiscal 27. It's going to be more steady state as we move forward.
Got it. Thank you for clarifying that.
And once again, I'd like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to see if any further questions enter the queue. And there are no further questions at this time. Jennifer Wernicke, I turn the call back over to you.
We appreciate your interest in Atmos Energy, and thank you for joining us. A recording of this call is available for replay on our website through June 30th, 2026. Have a good day.
And this concludes today's conference call. You may now disconnect.